All right, guys, here we go again. It's February 22nd, 2010, and it's time for a market update. I've got a chart of the E-mini S&P futures up here, and I want to go ahead and start out over here talking about what I see on this particular chart and how that's going to lead me to monitor the market this week. Now, we've seen a strong run up. We've seen a failure of resistance. But I also see that these candlesticks are shrinking. We have a doji type candle out here and a very small body candle. This indicates slowing momentum and exhaustion. Now I'm going to show you something interesting. I have a line study prepared down here, and what I want to show you is that this line study is the current range. So I'm going to basically drag that over here, and we want to show you that that is essentially the range we have traded up. Now, this is a range that we have seen before. Let's take a look back here, and let's take a look at these ranges that we've seen in the past. So we've got some swing ranges that we have spotted this trading range before. So here we see it run up from September through October. We see that same size run here on the daily chart, and then a drop back. Over here, October to November, we see another huge run up, same range up, and then a huge drop back. We see that run yet again from November through December, and then some sideways chop. Now over here, we already said that that's the one range we've identified, but check out the size of the drop. So we had a range down drop and a 2 to 3 day rally up afterwards. So I don't know if it's going to change directions, but I would suspect that it is. And there's a couple reasons that I think that. Things that I'm seeing, and I'm going to go ahead and delete that line study so we don't have to look at it anymore, is that we are range up. We are swing range up. And we have slowing momentum. We have reversal candles. And the volume picture is very interesting. We see some very heavy selling, very heavy participation during the sell-off. And then on the rally up, we see that the volume has gone below average, albeit it's pretty heavy volume, but the average is sloped up and the volume is trading under that. And now that we're getting to the top of the trading range, I'd like for you to notice that our volume is spiking again. That's interesting. So really what we see here is the market is range up. We have slowing momentum, some signal candles, and I would say the most probable outcome is going to be a drop. Now, if that drop lasts for a day or 2 or 3 or more, I can't say. But it would certainly create an opportunity for a short-term day trade. For a quick trading idea, I'm going to open up our seeker and I'm going to go run the market and I'm going to scan for a master trader bearish retracement and see what kind of hits I get. And I have a couple of really good candidates that rank very highly here, and that's explaining why would be another lesson for another day. And I'm going to go ahead and tile these vertically, and I am going to take a look at these. I'm going to link them together real quick. And I'm going to take a look at these patterns and see what we get. Ooh, that one's pretty good looking. Ooh, okay, I found a pretty good looking setup here. Now, I, in 2 seconds, found a trading opportunity on Hornbeck Offshore. I'm going to right click, add a study, throw on an average true range. And we have 85 cents of average daily movement from candle high to candle low on just a $19 stock. Now I'm going to go grab this fancy program called Calculator, drag it in here, and I'm going to take the 85 cents, 0.85, and divide it by the $19.20, 19.2, and that would give you a 4.4 average daily net yield. So a 4%, 4.4% average daily net yield. And that is very, very interesting to me. Now you consider what you're getting paid in your savings account, and I think I like the idea of this trade. Now we have a very strong run down, a rally up. What you'll notice is heavy selling on the downward run with the gap, and on the run up we see the volume lightening up. and we have now filled the gap, and we are showing signal candles. So let's get a little bit closer look. So here we are, a couple candles up with slowing momentum, shrinking candles. We filled the gap. We have a signal candle right here, and there's an opportunity to put in a short sell here with a sell stop below the candlestick low, a buy stop above the candlestick high, and a target of previous support, giving us well better than a 2-to-1 reward to risk ratio. So this quick trading idea on HOS, Hornbeck Offshore Services, is again a guaranteed, not a guarantee, but I like what I see on the setup. I will probably consider taking a look at this in the morning, and depending on which way the market is trading, that may or may not be a stock that I trade, but it certainly is interesting, and we'll follow up with that tomorrow. Thanks. This has been Noah on a market recap.